Bloomberg Audio Studios.
Podcasts, radio, news.
The headlines, third quarter revenue, ex-TAC, $70.55 billion. That's a beat. 72.88 was the estimate. Third quarter Google Cloud revenue also beat over $11 billion. The street estimate was about 10.8, Tim.
All right, let's I think we should bring in Mandeep Singh.
I think we should definitely bring in
He's
Mandeep
been
Singh.
watching these numbers very closely. He joins us here in the Bloomberg Interactive Brokers studio. A beat pretty much across the board, Mandeep. You cover this company and many others. We're going to get to some of the others in just a second. For Bloomberg Intelligence, what really sticks out to you?
I mean, the Google Cloud beat is quite impressive because the 35% growth rate is a nice acceleration. I mean, we are talking about 30% being the bogey. They really hit it out of the park when it comes to the Google Cloud.
So what does that tell you about their clients?
That the clients are deploying their AI workloads on Google Cloud. Remember, Google Cloud is the third when it comes to the cloud ranking.
You got AWS, Azure.
Azure.
Okay.
And Google Cloud has a run rate of $44 billion now with this print. Azure is about $80 billion and AWS is $105 billion. So I think what you will see is Google Cloud growing much faster than the other two. Most likely Microsoft will be around 30%. AWS is more 20%. So clearly that 35% growth rate is very impressive. And the cloud profitability actually was much better than expected, which is why you see the operating margin beat here.
How low was the bar going into this report for Alphabet?
It was, I think, low in the sense that the overall top line growth of 13% was quite low.
Yeah.
And they beat on, the search numbers were in line. The YouTube ad numbers were in line. The YouTube subscriptions continues to be the standout. They keep delivering quarter after quarter. And now YouTube plus cloud is a $100 billion run rate business. They guided to that, and they are showing it in this print.
And YouTube alone is a $50 billion business over the last 4 quarters, according to the release from the company.
I would say if you add the subscriptions to the ads, it's closer to 60. Simply because they bundle YouTube subscriptions in the other segment, and they've got some other revenue in there as well. So that's why that subscription number continues to be very impressive, the YouTube Premium and the YouTube TV.
Yeah.
And most likely it is margin accretive.
Just a quick reminder.
What?
Google bought YouTube back in 2006 for $1.65 billion.
Which is pretty amazing. Listen, we watch a lot of YouTube, YouTube different programming.
We're on YouTube right now.
We are on YouTube.
You're
Hello,
watching
everybody.
YouTube. She's not watching YouTube right now.
I'm not
She's
watching
working.
it. You know, it's interesting. We did some reporting, kicked off our broadcast a couple of hours ago about the overhang, the antitrust action, scrutiny over whether Alphabet's dominant market share in internet search is at a risk as other players in AI come in. How do you kind of factor those overhang elements in?
Yeah, look, there is no doubt if you're a regulator right now and looking at the search market, there is more competition. There's ChatGPT, there are other large language players, Anthropic, even Meta is talking about getting into search. So there is definitely Perplexity being another one. There is more competition for sure. Now, the thing that's impressed me this quarter was they continue to execute on search. So even though the search volumes are going down, they still had an inline quarter, $49.1 billion
Which is
in revenue.
pretty amazing, right?
Why are search volumes going down?
Because if ChatGPT is taking some of your traffic for informational queries, then Google search volume, I would say, is going down. But the ROI on their ad spend is so high that they can make it up on the ad pricing side. So even if volumes are going down, ad pricing continues to be stronger.
Why? Because they're the dominant player?
They are the dominant player, and they have the best kind of moat when it comes to the ad stack around keyword searches. There's no better platform for navigational searches or transactional searches. If you're an e-commerce player, you have to advertise on YouTube. There is no way out of it.
So what's the question that you would want to know from them on the earnings call? I mean, the stock's now up 4.2% in the aftermarket, so the momentum just building.
They give you so little in terms of guidance that I almost want to, plead the management to give us more details around their CapEx plans. Like every other company gives us so much more.
Well, this is the thing that going into this week, right, with all of these guys reporting and what it would tell us about the AI spend, what so far have you heard about, or are you feeling like you're getting
if the cloud number was a blowout, which it looks like in this print, then clearly, the spend on AI is translating into cloud revenue. And so to my mind, I think that AI CapEx investment is showing up in the cloud revenue. And that's why I want to know the CapEx guide. Are they overspending? Because at this pace, with the $50 billion CapEx, they're way lower than Microsoft at around $80 billion. So that's why that CapEx guide is very important.
Is it apples to apples when it comes to the way these companies are investing? Can we really say, okay, the Microsoft AI spend or Microsoft CapEx, we can compare it directly to Alphabet's?
You can, and Alphabet has got a different set of businesses along with AI and cloud. They have got Waymo. That's a big investment. I mean, that's a big call option on the company overall. That revenue line could be huge, and they are investing on the Waymo side. But look, when it comes to CapEx, it's all about training of large language models. Mm-hmm. Can you maintain the lead when it comes to Microsoft OpenAI partnership and where Google stacks up against them?
Where are we in the race? You said if they can maintain the lead. It has me. Where are we in the race?
I mean, some would argue the OpenAI model is still better for some of the large language model use cases.
And OpenAI is using Microsoft Azure.
They are using Microsoft Azure. So from that perspective, Google is playing catch up, but they have been releasing a lot more products lately than they were before. And that's where I think owning the chips, remember, Google has their own chips when it comes to training these models. They're not even reliant on NVIDIA for a large portion of training. They do that in-house, and that could be the reason why their CapEx spend could be much lower than Microsoft.
Can we ask you, we've got Reddit. While we've got you, Reddit is surging in the aftermarket. It's up about 17%, also out with their earnings, signals strong holiday quarter to come. Fourth quarter revenue, 385 to 400 million. The street estimate was 356.2. So the outlook is upbeat. What do we need to know here?
I mean, this company just IPO'd at the perfect time. And look, when it comes to Reddit,
it's all about timing.
They are one of the beneficiaries of LLMs, implementing search. Because where do you drive that traffic? When you show a result in an LLM, a lot of that traffic goes to Reddit. And that's why a lot of the Google traffic is now going to Reddit. A lot of the ChatGPT.
I gotta say, when I search in different things, like a lot of things go back to Reddit.
I also I spend more time on Reddit than any other single, quote unquote social media site. And I was such a late adopter to it.
Yeah, right.
I mean, think of what these LLMs are trained on. They're trained on Reddit data is one of the corpus that is common across all the LLMs. And that's why when you search for something, it takes you back to one of the Reddit posts.
Which is kind of what they said, right? When they were IPOing, right? That this was going to be what was so valuable about it, and it's playing out that way.
It is. They IPO'd at the perfect time. I mean, that acceleration is just amazing.
Can we ask you about Snap too?
Yeah.
Snap is up about 10-11% here in the aftermarket. So another one that's surging. Let's go to the outlook.
Down 36% so far this year.
Yeah, okay. So perspective. Sorry about that. I was getting a little excited. Fourth quarter revenue, 1.51 to 1.56 billion. The estimate on the street is 1.56 billion. So it sounds like that's a little bit of a range. So they projecting slower holiday advertising sales. Why are they up?
Well, in the case of Snap, like Tim said, they are up 20% one quarter, then down 20. And in this case, I think overall what you're seeing is the lower interest rates now. I mean, we have obviously seen
lower,
peak interest rate. Yeah. It helps the ad companies.
They're also buying back, I should say, up to $500 million.
I don't know what to make of it, because for a company of Snap size, doing a buyback right now is not the best use of their cash. But maybe the investors like that.
What should they be doing with their cash?
They should be deploying generative AI. Every platform right now should be looking to add more features that helps their engagement, and generative AI is what every social media platform is doing. Look at Meta. They're using it at scale.
What an interesting kind of drop of earnings, and we're focusing on a lot of these kind of, I feel like, high-tech interesting. Google, Alphabet, up still 3.4% in the aftermarket. Does it tell you anything potentially about what's to come from Meta, from Amazon, from Microsoft? Is there anything that we can infer here or no?
Yeah, I think for Meta, the bar is slightly higher, 20% growth rate. So I think they will beat and raise, but clearly the bar is higher. And for Microsoft, the cloud number will blow out. I mean, if Google Cloud did so well, I wouldn't be surprised if Microsoft's growth is around that 34-35% as well.
All right.
Reddit shares up 17.5% right now.
I know.
I mean, look, we're talking, in the hundreds of millions of dollars, not billions of dollars here. Last question. What does all of this mean, Mandeep, for what we get tomorrow and Thursday when we hear from Amazon and Apple?
I mean, for Amazon and Apple, I think they're
And Meta platforms too.
Yeah, look, Meta, I think should do well. I mean, ads continue to be strong, and they should probably beat and raise. And their large language model Llama is a big strategic advantage. So in the case of Apple or Amazon, they're very different. I think with Amazon, the AWS business is growing slower than Microsoft and Google, so that may weigh on them. And for Apple, it's about China. I mean, if they can counter that China risk, I think they are well positioned.
All right, we're going to leave it on that note. Mandeep Singh, the best. Bloomberg Intelligence breaking down those Alphabet earnings. Do want to mention, too, a couple of others that have crossed. AMD is down more than 5% here in the aftermarket. Their forecast falling short, suggesting a slower pace of AI growth. Advanced Micro Devices giving a lackluster revenue forecast for the current period. So there is some concerns that its AI sales are growing more slowly than anticipated. And then Chipotle also out with results.
All right, shares of Chipotle, ticker CMG in the after hours right now. Just waiting for the terminal
down about
here.
7% here in the aftermarket. Their sales falling short of investor expectations as well.
Same store sales. Look at this. The measure of locations open for at least 13 months rose 6%. That was below the average analyst estimate of 6.4%. The stock has advanced so far 32% this year, so it's done better than the S&P 500. The company did maintain its full year view that same-store sales will rise in the mid to high single-digit range.
All right, let's go back to, though, Alphabet, obviously the big one and the one that we've been really focusing on. Again, up about 4% here in the aftermarket. Caroline Hyde is here with us in studio, co-host of Bloomberg Technology on Bloomberg TV, 11 a.m. Wall Street time every day. You're welcome. You're welcome. You guys are going to be talking a lot about this.
We are.
What do you make?
Oh, the cloud revenue up 35%. I heard you call it out when they broke after the closing bell. And really, that is where the metal meets the road, really, doesn't it? Because this is where the investment, the capex of over $13 billion is vindicated because they're able to grow revenue to such a significant extent. Why are they winning new clients? Why are they getting the startups that are ex-Googlers coming to them for their compute power, for their services and their software? Because they've got AI prowess that's able to win yet more customers, more money, and more revenue.
Better AI prowess than Microsoft, who's in second place when it comes to the cloud, or AWS, who has the crown for first place?
Many would say that the need for compute is so vast that you go wherever you can take it. But ultimately, I think it's about whether they've got this supply ability and whether they're able to cater to it. I think people do feel that even though from a narrative perspective, in the consumer's mindset, maybe we suddenly thought that OpenAI had run away with artificial intelligence, generative AI, and leading the charge. I'm sorry, DeepMind has been there since 2010 with Google, as an extraordinary lab that has sophisticated AI prowess. And I think therefore they're able to start showing that even if the narrative moved on them, the actual reality is they're locking in customers and they're able to generate their own revenue from this. And that's why they're able to also drive up profitability. They're managing to be cost focused at the same time as driving up revenue.
We talk about, that their advertising business, right? It's a massive one. It's a big one, but there's a maturation aspect of it, right? And so it's important to see the cloud business continue to grow or the YouTube business continue to grow. I mean, these are important to see these aspects.
It is. And actually, we managed to live up to expectations when it came to the juggernaut that is the ad business. YouTube, considerable addition there. And look, this is where people have been worried about generative AI encroaching on that part of the business model too. Right. Would suddenly I not go to Google? Would I instead go to ChatGPT? Would I be using Perplexity? People aren't. And my way, I love Google AI overviews. I think it's really easy and it keeps me using what I'm used to using.
Right, exactly.
This is so remarkable to me. YouTube's total ads and subscription revenues surpassed $50 billion over the past 4 quarters. For the first time. I was marveling thinking back to 2006 when YouTube was an independent company. Google bought it for what, $1.6 billion or something?
And now they can move from freemium to premium. And suddenly we're all still completely addicted. They've got live sports. No wonder that we're returning to YouTube time and time again. I mean, they own market share when it comes to our eyeballs, and they can start charging us for it. So they're able to contribute more than $8 billion in terms of overall revenue for the business. And it's more about us paying for it as consumers than it is about advertising at the moment. People were worried that might run a little bit light, but they're able to get us to pay.
Caroline, I think about you and Ed and your coverage, going into tomorrow. What's kind of top of mind for you when it comes to Alphabet, and what it maybe says to us about some of the other big mega caps to report, which it's a massive week.
What does it signal for advertising resilience for the likes of Meta, for the likes of other players? But what does it mean in terms of Nvidia? We have to wait until November to get Nvidia.
Isn't it amazing?
But all of the hyperscalers are going to be coming this week, and we want to know that $13 billion is still there. What will Sundar Pichai talk about in terms of future capex spend? But also, he's got to take questions on anti-competitive antitrust issues. That's the overhang on the stock. We can see that the numbers are there, but what about the future business model and how he has to basically pivot and change to be able to take the pressure off himself from the DOJ here in the United States, the FTC, and over in Europe too?
Yeah, it's kind of how we started off a couple of hours ago, like the overhang on this one.
I'm looking at shares of Meta Platforms. They were higher today in the trade, but also higher by 0.8% in the after hours. That company reporting tomorrow after market.
All right, great stuff as always. Thank you.
Enjoy.
Long day for you. Really appreciate it. Caroline Hyde,
anytime.
Of course, co-host of Bloomberg Technology on Bloomberg TV with Ed Ludlow. So catch them at 11 a.m. Wall Street time every day, Monday through Friday.